Tesla just published Master Plan 4. Musk calls it concise, epic, and the leap into a post-autonomy future. The plan itself talks about sustainable abundance, AI stepping into the physical world to power cars, robots, and energy systems. Most assume these master plans are too grand to deliver, but history shows the opposite. Every time Tesla has executed Model 3 mass production, FSD beta, energy expansion, the market re-rated the company. In fact, early Robotaxi news alone nudged Tesla stock 8 to 11% higher in a single week. That's why Part 4 matters. It isn't just another wish list, it's Tesla's sharpest test yet. Scaling Robotaxi, deploying humanoid robots, and proving Tesla is far bigger than a car company. In the next few minutes, we'll break down 4 stories. FSD's global leap, Robotaxi expansion, Optimus stepping out of the lab, and the monetization model that could flip Tesla into a platform. Together, they show what this leap into a post-autonomy world really looks like. Elon Musk says Master Plan 4 is Tesla's leap into a post-autonomy world. What does that future look like? 4 stories are already unfolding. First, Robotaxi. In Austin, Tesla launched its pilot service. At first it was small, but then the city kept opening up. Geofence after geofence, expanded in weeks, not years. That's Tesla's advantage. Scaling with software, not expensive maps. The Bay Area is running pilots too, one of the toughest driving environments in the world. And waiting in the wings is the Cybercab, set for production in 2026. Imagine millions of Teslas, from brand new Cybercabs to Model 3 already in driveways, turning into earning machines overnight. Yes, Waymo already operates fully driverless rides and has logged more than 10 million paid trips. But Tesla's approach is bolder. Vision only, no HD maps. That could scale faster if it works, but reliability risk is higher. One question, however, remains to be answered. Who pays when the safety driver disappears? Tesla, the fleet operator, or the owner of the car? Liability and insurance could make or break Robotaxi economics. Second, full self-driving. FSD keeps learning. Version 14 is here, and the real leap isn't just in the code, it's in geography. Last month, Tesla switched on FSD in Australia. That's the first big step outside North America. Every new road, every new driver makes the system smarter. Scale multiplies fast. The benchmark is clear. Human drivers average about 1 accident per million miles. If Tesla proves FSD consistently beats that baseline, regulators gain the confidence to greenlight autonomy at scale. That's the KPI that could accelerate adoption, and once unlocked, it compounds globally. Third, Optimus. Tesla's humanoid robot is no longer just a demo. It's on factory floors today, moving parts and testing real tasks. Now imagine when those robots don't just assist, but work 18-hour shifts, anywhere from logistics centers to homes. Nvidia's Jensen Huang even predicts humanoids could be as common as cars. If it scales, it expands the effective labor supply. That's the heart of Musk's sustainable abundance pitch. Every robot adds productive hours to the economy the way cars once added mobility. The ROI test is simple. Can Optimus outperform wages or traditional cobots? If the answer is yes, Optimus doesn't just improve Tesla factories. It becomes a global workforce platform. And fourth, the monetization model. Recurring revenue per mile, per robot, per kilowatt hour. This is the pivot from one-off sales to compounding platform economics. It's the line item that could turn Tesla from a cyclical automaker into something closer to an infrastructure company. But this is also where Musk's sustainable abundance is tested. For consumers, it could be deflationary, cheaper transport, energy, even labor. But for Tesla and the grid, it's inflationary. Huge capex in GPUs, minerals, and storage. Abundance is both promise and pressure. And if history is any guide, the market won't reward Tesla's vision until it proves it in execution. 3 pillars: Robotaxi, FSD, Optimus, together with monetization tell one story. Tesla is moving beyond cars to a future where machines generate revenue, scale intelligence, and reshape labor. The vision is bold. The question now is simple. Can Tesla execute it? History suggests the answer lies in turning slides into steel. When the Model 3 scaled to mass production, Tesla's valuation tripled almost overnight. When FSD Beta hit the road in 2020, investors re-rated Tesla as a software company, pushing its market cap past $500 billion. And when energy storage and charging expanded under Master Plan 3, Tesla cracked the $1 trillion milestone by 2021. And now early Robotaxi launches in Austin have already nudged the stock by 8 to 11% higher on pilot news alone. Analysts at ARK estimate Robotaxi could account for 90% of Tesla's enterprise value by 2029. Wedbush goes further, suggesting autonomy could double Tesla's valuation yet again. Add to that Tesla's full self-driving expansion into new continents, like Australia, and the flywheel only spins faster. Every new road, every new driver widens the data gap between Tesla and its rivals, Waymo included. But the flywheel cuts both ways. Regulators may move slower than the tech. Public trust in autonomy still has to be earned. And the economics of humanoid robots are unproven at scale. On safety, the bar isn't vague. US drivers average about 1 accident per million miles. Until Tesla can prove FSD consistently beats that number, regulators will hesitate. Competitors like Waymo have already logged more than 10 million driverless paid rides, so the credibility gap is real. Compute supply is another choke point. With Dojo disbanded, Tesla now leans heavily on Nvidia and AMD for the chips that power autonomy and robotics. And with export controls tightening between the US and China, the pace of AI scaling could be set as much by geopolitics as by software. The risks are real, but history suggests Tesla only needs to clear each hurdle once. When it does, every breakthrough becomes locked in as an enduring advantage, and the next wave of growth opens up. So where does that leave Master Plan 4? It isn't just another slide deck, it's Tesla's pivot point. From selling cars, to building a platform, from one-time sales, to compounding revenue per mile, per robot, per kilowatt hour, the stakes couldn't be higher. If Tesla executes, it doesn't just grow like an automaker, it compounds like infrastructure. Multiple S-curves stacked: mobility, energy, robotics, and AI. For investors, that's the story analysts are already modelling. ARK says Robotaxi alone could drive 90% of Tesla's value by 2029. Wedbush argues autonomy could double valuation again. For society, it's Musk's sustainable abundance in action: cheaper transport, cheaper energy, cheaper labour. Machines expanding productivity the way cars once expanded mobility. The upside is massive, yet the risks remain. But history shows, when Tesla turns vision into execution, markets re-rate the company overnight. And that's the test of Master Plan 4. Not just whether it's bold enough, but whether Tesla can prove it, mile by mile, robot by robot, kilowatt hour by kilowatt hour. Can Tesla really prove it this time? Let me know below. I read every comment. And if you want another case of vision colliding with execution, check out my breakdown of Apple's AI strategy. The one that seems to defy Wall Street's skepticism